This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Welcome to Talk Your Book. I'm Chris Judd, and today we're joined by John Forwood from Rio Resources Funds Management. John, thanks very much for coming back on the show.
Chris, it's great to be back and to be doing it in person for the first time, so thanks for having me.
Now, before we get to your stock pick of choice, I thought it'd be good for you to take us through Rio Resources Funds Management and a little bit about your investment philosophy and how you guys approach markets.
Sure, thanks Chris. Look, we're very focused on the junior resources sector. We like to take a fair bit of technical risk. I'm a geologist by background, so we like to look for projects that are going to have lots of upside through the drill bit. And for example, our biggest holding, I think we might have spoken about a few years ago, Predictive Discovery, made a big discovery in West Africa a couple of years ago, and it went from half a cent to currently trading just under 20 cents. So that's the sort of upside we look for in our portfolio. We're across the commodity spectrum. So today we're going to talk a bit about iron ore, but we've got a fairly overweight exposure to gold. And we do everything right through to energy and oil and gas.
And what stock did you want to talk about today?
Yeah, it's a very interesting little company called CZR Resources, which is ASX listed.
And so we'll get into the particulars of its deposits in a minute, but as an iron ore hopeful, maybe just a little bit about the iron ore market more broadly, how it's been trading for those that haven't been following it overly closely.
Yeah, look, like a lot of assets, it's come off over the last 6 or 12 months or so. The benchmark price is trading around $90 US per tonne, which is still a very handsome price when you look at the long term.
Particularly the Aussie dollar, where it is as well. It's
I just was this morning looking at the chart overlaying the Aussie dollar on the iron ore price, and while they're not in the same proportions, the trend line is almost exactly the same. So Aussie dollar's come down from 76, 70 cents to the US dollar. Iron ore peaked at over $200 a tonne and now around 90 US dollars. But in Aussie dollar terms, it's still a fantastic margin. If you look at, for example, the Rio Tintos or the Fortescues of the world, their cash costs are in the $15 to $20 a tonne. And in Aussie dollars, they're getting well north of $100 a tonne. So it's a fantastic business to be in at the moment.
Now, I know you're very much a bottom-up investor, focusing on stock-specific ideas and issues, but from my perspective, I've been thinking a lot about the iron ore market because it is really unloved at the minute, and I think the bearish case is really easy. Near on half iron ore is sold to China, and China property market is tumbling, and large parts of their economy are in and out of lockdown and XYZ. But the bullish case, from my perspective, I'm potentially thinking about a potential reshoring of supply chains in the Western world. We've had a world with globalisation where manufacturing was outsourced to lower cost countries, and a lot of that appears to be coming back onshore as Western countries look to shore up their supply chains. And then also the idea that we hear about the Fed pivot a lot, but the idea that China's going to potentially pivot at some stage, open up their economy and start to stimulate some demand. Are those top-down things sort of reasonable for investors to be thinking about, do you think?
I think so, particularly in relation to iron ore, where iron ore demand matches GDP reasonably closely. I think in terms of the reshoring and the potential for a capex boom, I don't know if you follow a chap out of Scotland called Russell Napier.
Yeah.
He is talking about a massive capex boom over the next 15 to 20 years. Look, hopefully he's right. Certainly it's really required in industries like mining, where there's been a lot of underinvestment. The big guys have been very disciplined in their capital, but have been actually doing share buybacks and paying dividends rather than reinvesting in their own businesses. So there's real potential for a CapEx boom. It will be really interesting to see what happens in China post the Party Congress and the election of Xi for his third term. The proof will be in the pudding there. Having said that, there has been a lot of stimulus happening in China leading up to this Party Congress. It hasn't actually started to bite yet, but hopefully once now we've got some clear air, we might see that actually happening.
And now on CZR, maybe talk us through their different deposits.
Yeah, look, the main focus is this Robe Mesa deposit. They've got a small licence which is surrounded by Rio Tinto iron ore operations, plus there are a number of other mid-tier companies in the region, such as Mineral Resources. They're sitting on a resource of around 37 million tonnes at 56% Fe2O3, which is, look, it's not the benchmark grade of 62%, but it's still an extremely saleable product, which Rio Tinto, they've been basically mining the same deposit that CZR are sitting on. CZR have just got a piece of it in their licence. Interestingly, it was actually an old stock route. And that's why it wasn't in the state agreement that Rio Tinto had. So Rio Tinto are all around them, and they've got this sort of sliver, which is still represent about 10% of the total the reserve that Rio Tinto have. So it's not insubstantial, and there's definitely a play there with Rio being right on their boundary.
And their resource has been growing with consistent grades. How much bigger do you think it can grow from the 37 million tonnes?
Look, I think there's definitely some more upside. It won't be order of magnitude, given the size of their licence. But what they have done initially, they did a PFS, and it was just focused on the upper. These are called Channel Island deposits. It's focused on the upper one, which basically outcrops. And the previous drilling went through that and stopped. But the more recent drilling has gone through a relatively thin layer of waste, and then into another channel iron deposit, which is basically the same grade, which is fantastic. So that's ended up potentially doubling the resource, and we expect that the reserve, they're looking at an 8 to 10 year mine life at north of 3 million tonnes per annum or more. So that means you're talking about a reserve of at least 30 million tonnes and possibly north of 40 or 50 million tonnes.
And it's got a pretty unique relationship with Mark Creasy. Now, there'll be some people watching this that aren't overly big into the resources space, but certainly in WA, Mark Creasy's a legendary figure, sort of a billionaire prospector that drives around an old Toyota and just continues to find the most amazing mineral deposits.
Yeah.
Maybe give us an outline of what that relationship, the commercial relationship, looks like between CZR and Mark Creasy, and then maybe just an overview of just what a dominant factor he is in the smaller resources space in Australia.
So, in relation to CZR, basically Creasy, has seeded the projects into the company. He holds 55% of the company. The company's currently doing a rights issue. I understand that Creasy is going to take at least 25% of that and possibly more. So Creasy has a big chunk of the company, and he holds the minority interests in the joint venture assets. So in relation to the Robe Mesa project, he's got a 15% joint venture interest. In relation to some of CZR's sort of second tier projects, he's got up to a 30% interest. But as you say, Creasy is Australia's most famous prospector. Perhaps his most well-known recent success was the Nova Bollinger nickel PGM discovery in the Fraser Range down in southern Western Australia, which went on to be a multi-billion-dollar company and has been taken out by independents. So that's just one example. He ended up, years ago, he discovered the Jundee and Bronzewing deposits, which were sold to Great Central. So he's probably the largest private mineral rights holder in West Australia, if if not the whole country.
Does he
So,
just do Western Australia? Does he?
Look, I've talked to him about other places. He's been in Tasmania. He's been in elsewhere. He's involved in South Australia, I believe.
Okay.
But his main focus is Western Australia. That's for sure.
Yeah. And you mentioned that the PFS has been completed. What were the highlights from that?
Yeah, look, that was I think done in quite a different price environment, but on quite a much smaller resource. And that was just done on that top Channel iron deposit. So the results were very positive. The IRR was superb. Importantly, the capex was very low. I think the capex was in the sort of the $50 million range, which is well within the capital access capabilities of a small company. CZR has a market cap of around just under $50 million. So while it would be a stretch, I think for them to raise $50 or even $100 million with the assistance of things like NAIF, the Northern Australian Infrastructure Fund, other debt products, plus some equity, you would expect that Mark Creasy would be able to support the equity piece of a project financing. So that PFS was very positive, but the company realised that there was a lot more potential there. There was actually a board reshuffle that happened within the last 12 months, brought on some real iron ore development expertise. The MD, Stephen Murphy, he's ex-BHP. One of his more recent roles was CEO of a company that brought on the Roper River iron ore project in the Northern Territory. And the new chairman, Russell Clark, he used to run a company called Grange Resources, which had the iron ore producing operation Savage River in Tasmania. So there's some really good iron ore development expertise now within the company, which is going to drive it forward.
And what's the access to infrastructure like for CZR
Look,
in that area?
Sorry, Chris, that's what it's all about in terms of a bulk commodity like iron ore. So getting the product to port is the big one. The PFS was actually done on trucking the iron ore. I think it's just over 400 kilometres to Port Hedland, and that's a pretty hefty truck. But since then the diesel price has obviously gone up. So there's a number of other options. The leading one, of which I understand, is the Port of Onslow, or Port of Ashburton in Onslow, which is only around 100 or so k's from the project. To get there, they would have to put in 30 kilometres of road, and they're actually talking about having that as a sealed road, which is fairly unusual for a mining project, but would mean they wouldn't have any problem with the wet season or anything like that. And the capital for that is sort of, I think, around $20 million. So that's the big chunk of the capex. And then there's on-site infrastructure like a mining camp, contractors lay down area, and they need to put in crushing and screening. But it's very, very simple processing. They do call it direct shipping ore, but it does need a little bit of crushing and screening to get it to the right size.
And when's the DFS due?
That's actually steaming ahead. So the company's advised that they expect it in Q1 next year. So it could be only 3 months away.
And at prices around these sorts of levels, let's call it $100 US a tonne. What sort of cash flow can you see a company like this producing over 9 or 10 year life of mine?
Look, they're targeting a operating cost of 55 Aussie dollars or less per tonne, and at current prices in Aussie dollar terms, that would give them a margin up to $60 Aussie a tonne. So if they're talking about a minimum of 3 million tonnes per annum, that's $180 million Aussie a year. So it's a hell of a lot of money for a company that's only capped at just under $50 million.
Yeah,
and that's why we like the potential economics.
And talk to me about the proximity to Rio Tinto's Robe Valley assets. Can you see a world where they'd say we might as well just increase our deposit size by 10% and buy this and save these guys having to build out their own infrastructure?
Absolutely. Rio Tinto have been drilling with, I think it might be up to 8 or 10 rigs, right up to the property boundary. And you can see from the drone photos, like there's a series of drill holes that Rio have drilled on one side and CZR, literally 100 metres away have been drilling. So apparently Rio Tinto are short of tonnes in their Robe Valley iron ore operations. I've heard it might be up to 10 million tonnes per annum that they have capacity to fill. So while CZR might only have, say, 10% of what Rio Tinto have got in Rio's Robe Valley operations, it's still, it's exactly the same product, it's the same deposit, and it would still go quite some way to filling the potential hole that Rio have. So I think that Rio really like to see the boxes ticked, like heritage in particular, native title, mining licence, all that sort of stuff. So that's in process. We're hoping that, the company's hoping that all those boxes will be ticked by mid next year and the mining licence will be granted. So I could see a situation where once that happens, that there's Rio Tinto says, look, we'll just fold this into our operation. There's already been, I think it's quite a good relationship between CZR and Rio Tinto, according to CZR. And if you want to, if you talk about strip ratios and pit walls, say the property boundary's there, you need a pit wall. If you're going to have two different mines, you're going to have a pit wall that goes like that, and all this bit in between will be missed. So, yeah, much better to have it all under one operation. But that's what we always say to our investee companies. You've got to be in charge of your own destiny. You've got to have a plan that will not rely on a third party. And that's what CZR are doing. They're steaming along to do it 100% themselves. And if an offer they can't refuse comes along, well, fantastic. Yeah.
And they've also got some gold exploration assets that have had some nice looking hits. Talk to me about them and how you're viewing those. Yeah, well, look,
we like those assets. They are second tier, obviously, but one of our largest investments is De Grey Mining with the Hemi gold discovery, which is 9 million ounces. And that was found under about 40 metres of sand cover. But it's on the same belt as CZR's Croydon gold project. And so CZR have done some drilling on their Croydon gold project. At Top Camp, they got 2 metres at 22 grams a tonne. I think they might have got 8 metres at 10 grams a tonne. So some really exciting sniffs. Haven't been able to hang it together. What they've done is gone back and done some more geophysics and used the same techniques that were used to find Hemi, which is an intrusive, which is like a granite-hosted, if you like, gold deposit. So they're looking for granites. They're looking for the geophysical signature of these intrusives, and they'll hopefully be able to identify that with this new geophysical work they're doing, and then they'll go and target that. So they were hoping to get drilling there again by the end of this year. Wet season's probably starting to get pretty warm up there, so I'm not sure if that'll happen, but certainly next year there'll be hopefully some excitement come out of those gold projects.
And if they do hit in those gold projects, do you see them getting spun out? It's sort of a bit of a messy mix, having an iron ore company mixed with precious metals. How would you see that playing out?
Absolutely. I mean, for a acquirer, be it Rio Tinto or whatever, they won't be interested in the gold projects. And there are, CZR have got another set of gold base metal projects at Butterdoo down, inland from Geraldton. So there's a nice package there that could well be spun out in the right market. And we haven't mentioned, but CZR have other iron ore projects in their portfolio, which would naturally go with the Robe Mesa project. Yeah.
Brilliant. It's a brilliant summary. Great to have someone on with such deep industry expertise. So thanks very much for coming back on the show.
Absolute pleasure, Chris. Thank you.
Thanks, John.
Cheers.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.